Hey, happy Thursday. Hope you are doing well and enjoying your week. If you cannot tell, I'm actually in sunny Puerto Vallarta, Mexico this week. So I will make this a little bit of a shorter session, but I appreciate you joining us here. My name is Brandon Steele, financial advisor with Mainsail Financial Group. And our goal every Thursday is to bring to you the market news, the data, the trends, all the good stuff we're watching, and hopefully weed out a bit of the noise. So this week, I really want to focus on a jobs week's breakdown, which of course was last week, but a lot of those numbers came out on Friday. So I'm going to spend some time talking a little bit about that. And first, I will touch briefly on the ADP employment report, which came out on Wednesday. We touched on that a little bit last week, but the biggest thing was that non-farm payrolls came out on Friday, and it was a great number. It was 428,000 versus expectations of just shy of 400. So great number. We've been talking about the labor market and how important this is for a long time. But remember, job openings were still near 11.5 million. So overall, it looks great on the surface, right? Hopefully we are getting a lot more people to work and filling those jobs, but there is a lot of uncertainty. There's a lot of open jobs out there, and it's going to be extremely important to watch the jobs market, especially as we deal with inflation, higher interest rates, and all the above coming up here. So we really want to pay attention to the jobs market in the coming weeks, and hopefully we'll start to see some of those job openings decrease a little bit. I also wanted to touch briefly on the Consumer Price Index, or the CPI. So just yesterday on Wednesday, CPI numbers came out and it was up 0.6% for the month. And looking at year over year, we're still talking about 8.3%. In other words, inflation running at 8.3%. So I know if you follow this that you hear me talking about this every single week, but this is extremely important. And we've talked a lot about the Fed going back to last Thursday. This is why they are trying so hard to scramble, because obviously this is a very high inflation rate. It's not something we have seen for a very long time, and we need to get this under control. Unfortunately, I do not think that this slight change in interest rates is going to pull that down drastically, at least not very quickly. So there's still a lot of tools the Fed is talking about using, but inflation and the jobs data are something that we're going to continue to watch very closely in the coming weeks and months. For the question of the week, I'm going to skip this week again, just because I am in Puerto Vallarta, but we will come back next week, and I promise we'll touch on inflation bonds actually next Thursday for our question of the week. So thanks as always for joining me. We have a topic for next Thursday's question of the week. But as always, if you have any questions, let me know and we'll be happy to cover them. In fact, if we pull your question, I'll even send you a copy on me for the great idea. Have a great upcoming weekend. I will see you next Thursday at 3.